Hello and good morning. Welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Tuesday morning, global cues not looking all that great, but when it comes to our screen, yesterday nothing really to complain about, given the fact that we cleared that 26,000 level on a closing basis, and that's something that the market was really waiting for. And we've got, in fact, we've concluded the second quarter earnings season, which was far better than expected. We've had a favorable outcome for the market when it comes to the Bihar polls, emphatic victory by NDA that removes overhang over political uncertainty. So a lot of cues are out of the way. The next cue, according to experts, would be the India-US trade deal, and there have been quite a few comments both from the US president and his team as well, wherein they have said that we are very, very close to a deal with India. So yes, lots to digest. We have we are in fact knocking at lifetime highs as well, 26,277. Whether or not that gets cleared in November is something that, of course, we'll all be watching out for with bated breath. But the Nifty Bank Index, of course, as you all know, has been hitting fresh all-time highs yesterday as well. It cleared that 59,000 mark on the upside. We will talk about the markets in just a bit. But in terms of, life in Mumbai, in terms of commute, it has become a bit difficult since Sunday afternoon. Supply at Wadala unit, the MGL gas supply has been cut off, and that has of course crippled life in the financial capital of the country. But in an interview to CNBC, both spokespersons of GAIL and MGL have said that supply will be restored by this afternoon. So probably a lot of these issues that commuters have been facing, to come to work, to go home at rush hours, all of that, should abate by today itself. That's something that, the Mumbai cars will be watching out for. But in terms of, the markets, once again, the GIFT Nifty hinting at a muted start. It is the weekly F&O expiry as well on the Nifty. So things may be a little volatile, but I would still say that we are far better when it comes to, if you compare it with the global peers. Last night we had Wall Street selling off amid fears of, that AI trade, kind of fizzling out. Those fears have been lingering on when it comes to, Wall Street. And of course, in the middle of that, we saw a 500-point sell-off on the Dow as well. But yes, let's see whether or not we can defy global cues and make our way towards that 26,100 mark, because that, according to experts, happens to be one of the crucial resistance levels to watch out for on the index. If that gets cleared, it will be just a matter of time that we may be hitting record highs as well. But lots to discuss, lots of block deals likely today now that the second quarter earnings season is out of the way. There were supposed to be as many as 4 block deals. I think Zinka Logistics has already happened, but quite a few others to watch out for. A lot of impetus will be given to your stock related queries as well. Keep them coming in. We'll try and get them addressed as well. So yes, lots to watch out for over the next 1 hour. But before we do all that and get our experts on board, take a look at the top stories at this hour. Wall Street ends sharply lower, dragged by tech stocks amid the AI jitters. Dow sheds more than 550 points. Nasdaq loses nearly 200 points. Asian markets trade largely lower, mirroring Wall Street moves. Intensifying tensions between China and Japan keep investors on the edge. The GIFT Nifty indicating a lower start for the Indian market. Crude prices ease after loadings resumed at the Russian export hub after a 2-day suspension at the Black Sea port, while gold edges lower as the dollar firms up. Investors also await key jobs data. They are also waiting for, in fact, earnings from Nvidia that comes out later tomorrow night. India and US trade talks continue. US President Donald Trump's economic advisor Kevin Hassett says that the two countries are very close to reaching a trade deal, as that both nations are good friends and they hope to work it out pretty soon. And a slew of block deals likely today. Blackstone may sell 9.5% stake in Mphasis, and block deals also expected in the likes of Paytm, Emcure Pharma, and Zinka, I think, has already happened. All right, then those were the top stories at this hour. But let's take a look at the cues that we are getting for trade this morning, and of course recapping yesterday's action as well. Of course, this morning GIFT Nifty is looking fairly muted, But I would really love to see us defying weak global cues, because China, Japan, they are also locked in some kind of skirmish, and that is also weighing in on Nikkei and rest of Asia as well. Uh, so that's something that's weighing in on sentiment, and also the fact that there are a lot of concerns around the AI bubble, which is also weighing in on some of these chip stocks, and which is why we are seeing weakness across Wall Street as well. But for our markets, it has been good so far. 26,000 cleared on the upside. We've seen the market, in fact, gaining for a 6th consecutive day yesterday, and that's the second time that we are clocking in a 6-day winning streak, mind you. Mid-cap index hit a fresh record high yesterday. Nifty Bank index saw a record close yesterday, 59,000. That's the new peak that the Nifty Bank index scaled. The market breadth was neutral, but still it was in favor of gainers, and this despite the fact that the mid-cap index was up nearly 1%. So market breadth has been either neutral or favoring declines, even if we've seen a good up move coming in on the mid-cap index. That's been the trend so far. Yesterday, two-wheeler stocks saw a big move. We had Hero MotoCorp that was gaining somewhere around 4.5% or thereabouts. There were some positive brokerage notes on that stock. Eternal, that staged a good comeback yesterday. That was among the top Nifty gainers. But Tata Motors passenger vehicles, on the back of issues and troubles at JLR, earnings weren't all that great, and the stock, of course, got punished because of that. 5% down, and the top laggard on the Nifty. But of course, the showstopper yesterday was Grow. The stock has surged 70% from its IPO price just in a matter of 4-5 days. It has managed to join that 1 lakh crore rupee market club. In fact, it's very close to the market cap of BSE as well. And if we see another 8-9% upside from here, we will see Grow crossing BSE in terms of the market cap as well. So yes, remarkable up move for the likes of Grow. Remember, today we have another new listing. EdTech major PhysicsWallah will be listing on the bourses, and that will happen at the large trade was worth 1.4% equity or 174 crore rupees, and that changed hands at 676 rupees per share in the block deal window. Aside of that, sources also say that there could be a block deal in Emcure Pharma. BC Investments is likely to sell up to 2% stake via block deals, and offer size is at 493 crore rupees, with a floor price placed at almost 1300 rupees per share, 1296.5 to be precise. That will be at a 7% discount to yesterday's close price, and thereafter there will be a 90-day lock-in period for the seller. Zinka, of course, has already happened, but sources suggest that 3 shareholders were to sell up to 2% stake worth to 40 crore rupees at a base price of 670 rupees per share. Of course, shares have exchanged hands at 676 rupees per share. Even for Mphasis, there is a block deal that's likely, and our network had also reported yesterday that Blackstone is likely to trim stake in the counter. Mphasis shares came under a fair bit of pressure yesterday. I think they were down somewhere around 3% or thereabouts. In terms of another block deal that we could be looking forward to would be 197 or Paytm. SEF, 3 Mauritius, SEF Partners, Elevation Capital. These are some of the parties that would be selling stake according to sources, and the block size would be less than 2% of total equity, amounting to up to 1640 crore rupees. The floor price would be somewhere at 1281 rupees per share. That will be at a 4% discount to yesterday's close price. So yes, lots of supply hitting the market. Now that earnings season is over, we are seeing a resumption in block deals, and that has been the case throughout the year. We've seen promoters selling stake and a lot of block deals really happening on the Lal Street. And today, of course, we are seeing resumption and as many as 4-5 block deals taking place. But on that note, as promised, our guest is ready to join us. Jay Thakkar, Head Derivatives and Quant Research at ICICI Securities. Jay, lovely chatting with you. Great to have you on the show. But it's been a good run so far. 6-day winning streak for a second time in a month. So yes, good news. 26,000 was clear on the upside, but today happens to be the weekly F&O expiry on the Nifty, right?
Yeah,
What are your expectations? Global cues are not looking all that encouraging this morning, but 26,000 cleared. Would you still stick your neck out and say that we could test that 26,100 on the upside despite tepid global cues? Is that possible?
hi, good morning to you. Then it's been long, chatting with you, and thanks for having me on your show. But see, as far as Indian markets are concerned, Indian markets have really underperformed the global markets. Point one, Y2D, if you see the kind of returns which the other Asian markets or probably the US or the European markets have delivered so far in this calendar year, India has really underperformed its peers, you can say, or the global equities, you can say, and that is the reason we are seeing that despite of the heavy index short positions by the FIIs, you know. The Nifty is still at 26,000, and thanks to the DIs, if you take an exception of the Mahura trading, then it's been almost 56 days that the DIs have been buying in the Indian equities. So there has been a great flow from the domestic institutions via retail. And I would say that the global sell-off, or maybe the FI sell-off, for that matter, did not impact much negativity. As of now, at 26,000 levels, whether Nifty would test 26,100 or not, may be possible, because of the expiry day. That is likely, and Bank Nifty has been, trading quite positive. So I don't think that unless we see a breakdown below 58,000, there will be any sign of weakness in the Bank Nifty. The PSU banks have performed quite well. The private banks have underperformed. So if they perform, probably the Bank Nifty may inch higher from here on as well, and that could push Nifty towards 26,100. Um, but the other part of the market, like Reliance, which is trading at near the upper end of the range, or maybe IT, which has not been performing. So if at all, if you get support from those two sectors and the stocks, then Nifty climbing towards 26,000 would be easier. Otherwise, I think it would really find the resistance, because looking at the weekly expiry today, 26,000, that's the strike, Nandita, wherein there is highest call as well as put OI. So if Nifty trades below 26,000 levels today, then it will be difficult for Nifty to inch towards or climb towards 26,100. At least in the first half of the trading session. Thereafter, if the in the second half of the global markets, gives a hint of a recovery, then probably it can. But initially, it looks difficult.
Okay, initially it looks difficult. That's the call. But we just have about a minute to go for the markets to open. Just want to get your recommendations out of the way, Jay. What are you recommending for our viewers this morning?
Well, Biocon, I would say, Nandita, is one stock which has clearly broken out from a long consolidation. And I think within the pharma pack, which has been, the overall pharma has recovered quite well, and trading here is 2 3 months high, the overall index. And within that, Biocon has provided a very good breakout from a long consolidation. And there has been a significant long build up out here as well. So that is one stock which, Nandita, I would like to recommend as far as the short term trading bet is concerned. And I know one can target around the levels of 450 to 465, and second would be Marico from the FMCG pack. So both are from the defensive name. Marico post numbers have delivered a strong breakout. So I think it is inching towards 800 levels in the near term.
Marico, a lot of analysts have been recommending this stock, and it did manage to hit a fresh high yesterday, despite impact on margins of high copra prices. But yes, nevertheless, the stock has been doing well, and numbers are fairly okay. But let's take a look at the Nifty. Then the first ticks aren't really positive. We have kind of a negative start this morning. 25,966. That's where we are at. It's a 50-point cut, 60 odd point cut on the index. Sensex down 200, mid cap index also moving in tandem with benchmarks. It's down somewhere around 85 points or thereabouts. In terms of breadth, as of now, it's tilted in favor of gainers. But let's see, we'll have to wait for it to settle down to see whether or not we can call that a trend for the day or not. But all in all, it is a quiet start, a little on the subdued side. Let's see, expiry days are marked by volatility. Let's see what really happens as we progress through the day. But in terms of sectors, barring a couple of names like media and real estate, that's like hardly in the green. All the other sectors are trading in the red. Nifty metal, that's the big laggard, followed by IT and PSU banks, looking at some selling pressure after the steady up move it has seen over the last two sessions. Autos, they were showing strength yesterday. Today, succumbing to some bit of profit taking. FMCG also down. FMCG was also up yesterday, and the Nifty Bank as well after hitting that fresh high yesterday. We're seeing some bit of profit taking there. Metals, I think, is down because dollar has firmed up ahead of the data that is going to come out in the US after a blackout. Following the US government shutdown. But now that the US government has reopened, we will see a slew of data coming out this week. You have the FOMC minutes that will give us some insight into what the Fed is expected to do in the December meeting. Of course, the chances or the bets of a rate cut have come down significantly to around 40% when it comes to the Fed watch tool. But you have the jobs data for September also that would come out, and the big earnings, Nvidia, that would be out tomorrow after market hours. But yes, metals under pressure because of strength in dollar. IT, PSU banks, as I mentioned. So most of the sectors are trading in the red as of now. In terms of the individual movers, then, as metals are the biggest laggards today, no points for guessing. Hindalco and Tata Steel are the top laggards on the index, 1% down. Both the stocks. Kotak Mahindra Bank has come under selling pressure. Board will be meeting later this week to consider stock split, and yesterday saw good gains, today under selling pressure. Tech Mahindra, Maruti Suzuki, Nestle, HCL Tech, these are among the other laggards. On the other hand, you are seeing Max Healthcare building on the gains that it saw yesterday. Axis Bank, bucking the trend here. Bharat Electronics, Interglobe, once again Interglobe is back in the green after a string of losses. Bajaj Auto, Bharti Airtel, HDFC Bank are some of the counters that are holding out. But all in all, it is a subdued start, and the breadth is now in the negative zone. It is favoring declines more than it's favoring advances. So yes, not a pretty picture as of now, but let's see how things really pan out as the day progresses. Any thoughts on Max Healthcare? Jay, started out yesterday on a weak note, but saw good recovery, and today building on to that. What would you do with this stock post numbers, which were fairly decent?
Actually, this stock has come into the Nifty recently, and definitely it would attract the index funds money flow as well. And in the near term, I think that's in Nandita for this stock. 1060 is a very, very critical support. If those levels are held, you can see the recovery coming in. But if 1060 breaks, I think there would be no reason for to be into the max healthcare, at least from the short term point of view. Because see, below 1060, it would be provide a breakdown from the bearish head and shoulders patterns technically. And recently, what we have also observed is that there has been certain long unwinding in this stock. So the futures participation or the participation in the futures segment relatively has come down with the prices coming down, and that clearly indicates long unwinding, and and the stock has been forming lower highs now on the weekly charts. So I would not be much bullish on this stock. I mean, if I have to go in within the healthcare or maybe the pharma space, then there are better stocks like Biocon, as I suggested, or probably you can bottom fish Landmark. Post the commentary of the management, post the results as well, if you want to bottom fish. And then there are stocks like Lupin, which could actually witness some short covering because there is huge short pile up out there. So the risk over there is favorable. So these are the few stocks wherein I would be focusing on. Lotus Labs making continuously life highs. I mean, that is one stock which is in a clear uptrend. So the other stocks within this healthcare and pharma pack are relatively better, I would say, as compared to Max. But then since it has come into the Nifty, so as I said, that it can attract some money flow through index funds, and which would help it to actually at least trade within the range of say 1200 to 1060. And 1060 should be one's strict stop loss, at least from the short term point of view.
1066 stop loss. There are better stocks in the healthcare space. You said so. There are a couple of queries that have come in on the healthcare space. Then might as well get them addressed here itself. Query from Naveen on your thoughts on Sun Pharma for the next 6 months, and I think I also spotted a query from Komal. She wanted to know which are the good stocks to invest in the pharma space for the next 1 year. Your thoughts? You named a few, pharma stocks, but anything else within the generic space, specialty chemicals, specialty pharma? I beg your pardon. Anything that one could look at?
Nandita, as I said that, I mean, two stocks which are clearly on my mind are Laurus and Biocon. There is a very high probability of
Hmm.
these two continuing the uptrend. Probably there is a high probability that Biocon forms a new lifetime high as well. After a long consolidation of almost 5, 6 months, we have seen a significant long build-up in the stock, and there has been a good recovery. Hence, Biocon and Laurus has been performing quite well. I mean,
Hmm.
prior to results or post results, if you see the stock performance, I mean, it has been one of the best performers within the pharma space. So I think having two stocks within pharma is more than enough, rather than having the
Hmm.
entire basket. Otherwise, it would be as good as you'll be investing in pharma-specific mutual fund. So these are the two picks, at least from the pharma names, which I believe that
Hmm.
could deliver and outperform the overall index as well.
Okay, so Biocon and Laurus Labs, these are the two recommendations. In fact, two top picks within this basket. But let's talk about some of these newsmakers, the likes of Emcure, which are down in trade. Of course, there is likely to be a block deal in this particular counter. BC Investments, as I mentioned at the start, is likely to sell up to 2% stake. The stock is down almost 4% or thereabouts. If the block deal really happens, I'm not sure whether it's already happened. Yes, it has already happened. 2.4% equity changed hands via two block deals. Supply pressure at the 1340 or so. What would you do with an MCure since it has seen a block deal happening?
See, I mean, IPO price it went up, and then from those levels only it is finding or struggling to move higher. So it opened around the levels of say 1290 to 1300 levels, made a high of around 1500, and then around 1500 is whenever it is coming, it is finding pressure, which clearly indicates that at these levels there is a lot of supply, maybe direct market or maybe via block deals. So 1500 becomes very, very critical for this
Hmm.
stock. Close about those levels only would get that momentum going forward. And once that supply is over, once it moves above 1500, closes above those levels, it will be finding a swift and a great upward momentum. Till then, it could consolidate a bit, 1200 to 1500. That would be the range within which MCOR would trade in the near term, or maybe in the medium term. The long term looks positive. I mean, this is one of the very quality name in the pharma space, undoubtedly. But then the momentum which is required by the trader and an investor would be above 1500 levels only.
Hmm. Okay, that's about Emcure. Long term, of course, the trend looks like it's intact and it's positive. But let's talk about Mphasis as well. This stock has been in focus. Yesterday, we had reported about the block deal that was supposed to happen today, and it has happened. 0.9% or almost 1% equity worth 500 crore rupees has changed hands via block deals at 2,640 rupees per share. I'm talking about Mphasis. The company has also said that promoter may sell up to 1.8 crore shares via open market transactions. The stock has been witnessing, pressure. If you look at the last 1 month, last 5 days as well, although 6 month charts volatile but with positive returns. At 2700, how is it looking like? Because it has seen a fair bit of correction from the top.
Once in Aditya, since last 4 years, this stock has been consolidating, right? And slowly and gradually, the range has been getting narrow.
Hmm.
And technically, when you actually have to explain it to someone, then I would actually frame it as in a way that it's forming a symmetrical triangular pattern. So what happens in that is that the upper end comes down, keeps shifting lower, and the lower range keeps shifting higher, and that's how you see the range consolidating and becoming narrower. There's still much more time for this range to actually complete,
Hmm.
consolidation to complete, and thereafter this stock providing a breakout. And there has not been a
Okay.
significant move in the IT pack as well. So that's a long story. I mean, 4 years. I mean, if I have to cut it short, then of the last 4 to 5 months, if you see this stock has been trading within a range of say 3000 to 2500, right? So below 2500, yes, it's heading towards 2200, that is 300 points down, and about 2500, 2900, or maybe 3000. It's heading towards 3300. Right? That's how it is.
Hmm. Okay, that's the view on Mphasis. But let's shift focus to some other newsmakers then. Yesterday, post market, there was news flow around AstraZeneca Pharma as well. It has partnered with Sun Pharma to co market and distribute key hyperkalemia drug in India. Now, of course, both the companies will be, marketing the product in different under different brands, and AstraZeneca will retain the intellectual property rights, marketing authorization, and import licenses for the molecule as well. The stock of an AstraZeneca Pharma has seen a good up move in the last 6 months, but last month or the short-term charts, don't really indicate one particular trend. Would it remain sideways to positive going forward, or what are the kind of signals that you're getting from the chart on an AstraZeneca now?
Well, this has been one of the outperformers. I mean, from the non-FNO pack, for sure. And but the only concern, Nandita, out here is that the rate of change of price, on the upside, that is in the declining phase, which is not good. I mean, that means that the delta or the momentum out here that is getting weakened. Okay. So the rate of change in price on the upside is basically coming down, indicating that there is some selling pressure at the higher levels in the near term at around the levels of say 96 to 9700 levels. Only above those levels you may see that rate of change may increase, and you will see the stock making lifetime high. If not, then there could be some further consolidation, and that could lead to a good price wise correction in the percentage basis, which can get the stock to 7800 as well. You know. So, I mean, on the upside, Nandita, when I say that, 96, 9700 is the resistance, and, if not, then we slip to 7800. You see the risk if you are holding long would not favor on the long side. Hence, anyone holding this stock should have a very strict stop loss of around, say, 9000. If it breaks, the chances of it slipping towards 7800 would be higher. If not, then probably it might inch towards the upper end of the range.
Okay, that's about AstraZeneca then. But let's shift focus to our queries then. Quite a few of them this morning, so I want to get them addressed. There's one stock that saw very good volumes yesterday and saw a double-digit move. That's Narayana Health. Nana Prakasam has a query. He's holding 45 shares at 1860 or so. Wants to know if the stock will touch 52-week high in the next 3 months. Just want to know what the stock is really doing right now. Yesterday, it saw a very good 10 to 12% kind of an up move. Today, it's extending that up move, but just about 0.5% uptick or so. But not very far from 52-week highs to 270 rupees away. Would you say 3 months is when within this time frame it could make a dash at that level?
Well, see, Narayana Health really needs to be checked because this is one of the stock which, as you rightly said, has performed quite well, and recently did provide a breakout. Nandita, it was consolidating within that range of say 1850 to 1700, and above 1850, just like we saw a good increase in volumes as well. So it was a price volume breakout which happened yesterday. So now in the near term, 1850 till those levels are held. Yes, the possibility of this stock inching towards say 2400 would be higher.
Okay, that's the view on Narayan Health. Hope that answers your query. Couple of queries on stocks from the metal space. Let's get them addressed. Shweta Naidu has a query on NMDC. She's bought at 78. Wants to know, is there any momentum left, or will it consolidate for a while? NMDC hasn't fired up, although metals as a basket has done well. What are your thoughts, and what should be done with the share of NMDC, which she's been holding at 78 and making a fair bit of some bit of a loss here? The stock is quoting at under 76. What's your advice?
You are right, Anita. It did not perform well as vis-a-vis its peers, and in fact, it was really an underperformance. And at a point of time, it looked that it might just take off, but then it didn't. And with the global sell-off, especially in the metals, as well as the rise of dollar index, as you rightly pointed out, right at the start of the show, and that is now weighing pressure on the metal stocks, and because of which I think NMDC may not perform right now. Because see, what happens is basically typically with these kind of stocks, what happens, Nandita, is that when the overall sector is performing and if these stocks are not, and slowly and steadily they go, the relative strength is less. But when the overall sector turns down, they would quickly get into it, right? So that's the sign of a clear weakness. And
Hmm.
till that persists, I think NMDC would not be able to outperform, or maybe trade relatively, or maybe inversely as against its overall sector or peers. So the short-term trend metal is down, hence it would be down for NMDC as well. And what I would say is that it has multiple resistance around the levels of 78 to 80 range. So now until those levels are not taken off, I mean, to slip towards the lower end of the range, which could be as low as 70, 72. So yes, I mean, if one is having a leverage position, one should
Hmm.
be really cautious out there.
All right. If you have a leverage position, you should be cautious out there when it comes to NMDC. But what about Hindalco and Nalco? Saw a good rally, but off late these stocks have taken a pause. Especially Hindalco, of course, we had that whole Novelis issue as well playing out. There is a query. I'm not really getting the person's name. Wants to know whether it's a good investment bet, Hindalco and Nalco. As positional plays, how are they looking now?
Nalco, undoubtedly. Hindalco, I'm not sure. Right. So Hindalco has never been one of, see, I mean,
Hmm.
although it performed, maybe, it would be something which I could not sense it from the long-term point of view. But Nandita, I could never take a call on this stock, particularly from the long-term point of view. I'm talking from the investment point of view. Trading point of view is fine. Nalco, whether it is trading, investment, whatever, the overall data is very smooth out there. It's quite well working quantitatively, I would say. And there has not been much of the noise technically as well. I mean, when you look on the charts. So anytime I would say Nalco or National Aluminum
Hmm.
is far better than India. Maybe from the trading point of view, investment point of view. Now looking or
Okay.
discussing about the levels, I think 240 should be a very, very good support for Nalco. I mean, those levels should hold out if the overall uptrend is
Hmm.
intact within the markets and metal pack. If it is just a short-term correction. So if
Right.
240 levels are held, I think Nalco and those levels could definitely be accumulated, and that's anytime better than Hindalco.
All right, Nalco looking better from an investment perspective if you compare it with Hindalco. Hope that answers your query. Just very quickly, you want to get two more queries answered, and very quickly, Mr. NV Hari Krishna wants to know your thoughts on a Canara Bank and a City Union Bank and NBCC. He wants to know for the long term, should one book profits? I'm sure he's holding some position here for a long term, for a longer period of time, and he wants to know if it's a good time to book profits in these three counters. What would you say?
See, Canara Bank definitely, sir, you should be holding until unless it is holding to 120 levels from the long-term point of view. I mean, you have no such signs of weakness as of now in Canara Bank or maybe PSU banks. I mean, they might have just started their good medium to long-term uptrend. So be with the trend, I mean, and 120 should be your level out there. And CUB, a huge underperformance. And now the way the stock has taken off 200 levels, 225 for that matter, I mean, till it's not slipping below 225, CUB should not be exited. In fact, it is one of the stock to be into. Any dips, you should be further accumulating as well. Which was the third one I missed out, sorry.
Hmm. I think NBCC.
NBCC, I think one should be avoiding for sure. As of now, in the short term, I think Nandita is really stuck within the
Hmm.
range of 120 and 110. 110 or 100. Probably that's 20% kind of a range. It's stuck. And
Sure.
I mean, it would not provide you the momentum. So maybe ignore this.
Hmm. All right, we have our second guest really waiting by, but before that, just one last query, and because it's on a space that's been pretty hot, Haresh Thakur wants to know your thoughts on BPCL and Oil India, whether one should invest or add for the longer term. BPCL, IOC, HPCL in focus. Crude prices have been cooling. Yesterday, we had news flow that India will be buying or importing gas from US as well. And we've seen how the prices have moved. BPCL very close to 52-week highs as well. How would you look at these OMCs and Oil India as well in the current context?
HPCL, and then the HPCL undoubtedly looks far better than BPCL and IC from the risk reward point of view, I think so. One should be transferring their wealth from IOC to PCL to HPCL. So it's like within the sectoral, it would be a sectoral within the sector only there would be a churn. Okay, so it's an intra-sector rotation. And as far as Oil India is concerned, sir, I would say that yes, from the long-term point of view, year two, there's a good amount of opportunity, but less of momentum as of now. That would be confirmed only about the levels of 500. So wait and watch until 500 levels gets taken off on Oil India. Do not rush out there. But HPCL, I mean, at these levels, or maybe at any dips, should definitely one should be accumulating. I think that till it's not closing below the levels of 440, as far as HPCL is concerned, the overall medium to long term trend is definitely up and intact.
All right, got that. But with that, Jay, would like to thank you for taking out time and joining in this morning, and of course sharing your thoughts, your stock picks, and
Thank you.
helping our viewers navigate the queries as well. For our viewers, if we couldn't take up your queries, please keep them coming
Thank
in.
you.
We'll try and take them.
Pleasure be on your
Thanks a
show.
lot, Jay. On that note.
Thank you. Looking forward as well. Thank you, Nandita.
Thanks a lot. Well, with that, of course, thank you. Okay, on that note, our second guest is waiting by big voice. Feroze Azeez, joint CEO at Anand Rathi Wealth. Feroze, thanks a lot for waiting so patiently. I hope you've been well. Market-wise, things have been looking fairly okay. But I would like to point out that the reaction to second quarter results that have been fairly upbeat, and of course the emphatic NDA victory in the Bihar polls have been lukewarm, to say the least. Would you concur, and what is it that's stopping the markets from taking off? Because quite a few pieces of the puzzle are now coming together. Political uncertainty out of the way, earnings not as bad as the street was fearing, and now there is chatter about the fact that an India-US deal could come by very soon. We have Trump and his entire team actually making such comments. So what is it that's stopping the market really from taking off from here? Do you think a lot of it was already in the price?
Good morning, Nandita. See, I don't know whether this is called stopping. The lowest level of the last 1 year was 22,082, which was on 4th of March. So the point I'm trying to make is, if you look at it from the trough, it's almost 18% higher. On the day when Trump announced and tried to create panic in our capital markets with the 25% tariff and then backing it up with another 25%, Nifty was at 24,400, which is about 7% higher. Somebody like the world's strongest voice tried to correct you by 10%. On the contrary, you're 5-7% higher. It's all about expectations and reality, right? If I'm expecting that hunky-dory situation is 30,000 Nifty, then of course 26 will look abysmally small. But if you're looking at peak to trough, peak was September last year, 26,200. So that's point one. So look at it from where we are. We're just 1% away from the peak, and practically 17-18% away from the trough of the last one. And that's in spite of so much negative news. Time and again, global uncertainty, the kind of AI bubble which people are talking about. And in spite of that, you're at peaks. And I personally think the earnings on the Nifty companies haven't been so great. I don't know why is the narrative being built that it's been great. 1.7% is the Nifty earnings for the last quarter. Not that I'm disappointed, because that was what is expected. 1.7, there are about 11 companies, which 9 companies, 10 companies gave degrowth of greater than 10%. 15 companies gave growth of more than 20%. And the rest of the 24 companies gave growth of 0 to 20. Year on year, same quarter.
That's true, and we'll dissect the earnings, more granularly in just a bit. And I take your point. Barring a few sectors, the Nifty universe hasn't really handed such a great report card. But, before that, let's do some crystal ball gazing, right? Goldman Sachs has recently upgraded India, and they believe 2026 will be a blockbuster year. The Nifty target at 29,000. You were mentioning 30,000, but they are close, 29,000. That's an 11 to 12% upside from where we are right now. So do you think that's a possibility? Do you think 2026 will be far better, given the fact that last 1 year we have seen underperformance vis-a-vis emerging markets? We've been flat if you look at absolute terms, and that's despite all the spate of negative news, as you pointed out. So that's a good thing. But do you think 2026 is when we take off and a double-digit up move is possible, just like Goldman Sachs is pointing out?
Yes, Nandita, definitely there is more upside than downside. There's if you look at the FII inflows, are going to reverse the next 3 months is my prediction. Active FIs have sold as much as they could. Passive FIs are building up positions. If you look at the vanguards of the world, which follow FTSE, you will see huge position build up. Unfortunately, camouflaged by the active FI selling, moving to China and stuff. But I upgraded India on 4th of June when the election counting was happening, before the counting, if you remember, on money control, of course. 21,700 was very apparent that there was not too much fall. Any equity investor should always assume that I'm cutting a check, I will see 10% fall. At 21,700, we thought that the markets would do well, because for markets to fall, the prime requisite is huge selling. Where does selling come from? If you dissect selling into domestic, foreign three kinds: proprietary selling, active FI selling, passive selling, and then you dissect it between cash market and derivative market, index future selling. All of it was already sold, and currently the status is again heavier selling than buying. 88% short positions in index futures, FIs having sold 1.5 lakh crores, net zero inflow for the last 5 years by FIs. All these are positions which are light positions. In light positions, markets don't fall. I personally think any positive trigger has a reasonable potential of a short covering, and 28,000 Nifty is very likely. Of course, those are numbers. Broader market earnings have been very good to give the statement credibility, Nandita. Almost 17% earnings growth for in a small cap 250 stocks, which I think is great earnings. Nifty, of course, I showed the other side of the story, 1.7%. Mid cap earnings have been 22%. The 150 stocks have been 22% growth year on year for the same quarter.
True that. Of course, mid caps have done fairly better than large caps if you compare it on earnings basis. But let's also talk about the concerns around the AI bubble that's forming in US tech. We've seen some marquee names step back from Nvidia. That's been an AI darling, as you all know. What if the AI bubble bursts? Would there be a spillover impact on India, and a positive one? Because, a lot of people are talking about India as an anti-AI trade. Could, foreign investors then look towards India? Because, right now they are looking at China and other markets because A, they are compared to India cheaper valuation wise, plus they are getting AI as well. But if that AI bubble bursts, do you think India would feature higher on the list vis-a-vis all these other cheap EMs, or do you think that would be too far out to predict?
I think first, the bubble bursting will have a larger collateral damage irrespective which capital market you sit in. Of course, in the long run, it could be beneficial because AI bubble is something which AI as a stream we have not participated, and I don't think there are any listed players in the capital markets which can take huge advantage. Even our technology sector has been a laggard in terms of innovation, and that's one crib which each of us have had with the Indian technology. They have their business models are different, and there's nothing wrong with that. But coming back to AI bubble, if you look at S&P 500, 1 year return is about 13%, Nasdaq is about 20%, Dow Jones is about 10-11%. Of course, the stocks, the AI stocks have all the technology stocks have run up, especially the larger weightages in Nasdaq. But I personally think as long as the broader market has in the US has not run up 30, 40, 50%, the AI bubble bursting will definitely have damage, not such a large damage. Like if you go back to 2007 rally, it was a broad-based rally. S&P 500 had risen almost 42% and 50% for Dow Jones. So when that kind of a rally, broad-based rally happens, corrections are very, very steep. When there are fewer pockets which have rallied, and that has, of course, resulted in 13, 14%. So what am I trying to get to? India might have long-term benefit, but if the AI bubble bursts, we will also be caught in the eye of the storm. That's point one. Point two, will the damage be very large, like 20%, 30% correction on the broader US market? Very unlikely, because 1 year return is 30. Generally, when a bubble crashes, you erase the last 1-2 year return, not 20-year return, in my opinion, and unless you're looking at a Japan kind of a bubble in the 1980s.
Sure. But what are your thoughts? Do you think the AI bubble is about to burst? What are you picking up with the conversations that you've had so far with your global investors?
See, I think bubbles burst. It's about the timing of it. I personally think it's not going to be very easy that the AI bubble bursts. Why? Because there's a lot of index fund investing in the US. 90%, 80% of the money is invested in a formula method, and human judgment is near zero. For only 10%, there's human judgment. What does that mean? Because the AI stocks are the heavyweights in the US market, there's more money coming in, creating more weight. More weight is creating more money coming in, and that's resulting in price rise. So it's a vicious cycle. So breaking that cycle in India is very easy because we do out of our 47 lakh crores of mutual funds, 12 lakhs is passive and 35 lakhs, 36 lakhs is active. It's the other way around for the US. For the bubble to burst, the top 6, 7 stocks should have substantive selling. Now, in an index fund kind of a overall economy or capital market, it's difficult to burst. So I don't see that happening in the next 3, 4, 5 months. I think it could happen after a further rally, not just yet.
Okay, point taken. I think I was talking to Mr. Ajay Bagga, market veteran, yesterday. He said the same thing, that it's not that easy for the bubble to burst, and it could at least take another 2 odd years for that to really happen and see a substantial crash in the US markets. But back home, let's talk about earnings as well, since we were talking about it just a while ago. Most of the outperformance, as you mentioned, is coming from cyclicals, metals, OMCs, cement. When you strip this out, of course, the Nifty universe isn't looking all that great. It's actually flat to perhaps down. How should investors really interpret this for future earnings, rest of the quarters, and FY27 as well? Because a lot of us are penciling in a double-digit earnings for FY27. Do you think that's far out? Is that a possibility? At least for the Nifty universe, how is it looking?
Our estimate of earnings growth for Nifty was close to about 12% on a base of 1,092, if I'm not wrong. The earnings growth for the last financial year of Nifty was about 11% because there were 4 constituents of Nifty which changed. So where did Nifty end? Its current constituents ended its earning at about 1,090. I personally think a 12% earnings growth after this quarter, Q2, gets more solidified than weakened. That's point 1. Point 2, after a time correction of a year and a price correction of 1% only now left, I personally think the probability that the next 3 years, and this is the most important raw material for one to create the portfolio, next 3 years, Nifty delivering more than median return of its historical past, which is 11.3%, is 95% and above. So if you get a raw material of 11.5%, building a portfolio to get to 14-15% return with a risk level significantly less than Nifty is possible. So I personally think the odds of that happening from here on, you can mark me on this one, is very, very high, upwards of 95%. 11% plus returns compounded on Nifty can create huge opportunity for one person to build a 14-15% portfolio if that's the raw material you're receiving.
Okay. Interesting. Then which sectors do you think can actually deliver that double-digit revenue growth here on? And which are the, how should investors really position their portfolios in the wake of that? Chase momentum, rotate to value, or perhaps stay defensive, for building a portfolio for the magnitude of gains that you mentioned. How should one go about it?
Yes, I personally think you should, if you're a investor, I personally think top down is a better strategy than bottom up for an individual investor, because identifying a stock and doing research on 500-700 stocks and then picking it up is it's very good to hear that, read a balance sheet, understand, but there's 20 other things to understand, and you can't do that. 20 into 1,000 is 20,000, right? Data points you'll have to look at to create a portfolio with 20 stocks. So I personally think you have to look at which are the sectors which can outperform Nifty by 3-4%. If that's the case, I would say auto, banking, and consumption. These are the ABC, of course, the acronym is ease of remembering, can create an alpha over compounded periods of 3 years, a 3 to 4% alpha. And one offbeat theme is the Nifty capital market, which Motilal Oswal, I think, did a fund as well. So Nifty capital markets, today you are, everybody speaks of financialization. Today, you don't have one stock from capital markets represented in Nifty. Will that be the case in the next 10 years? I personally think at least two, three capital market stocks out of the 15, 16 which are there will form a part of Nifty, and that will create a re-rating. And if you can get into Nifty capital markets, of course, I have to give the disclaimer, we are a part of the Nifty capital market as a listed company. But I would be reasonably bullish that if India has to get financialization, capital market needs to get some representation in the largest index of the country.
Sure, since you mentioned capital market stocks, and of course, I want to just point out what Grow has done. I'm sure you won't be commenting on specific companies, but 1 lakh crore market cap, it's actually created a frenzy, right? Does this signal froth in consumer tech valuations? What should retail investors do when a stock rallies 60% or 70% in just like 4 sessions?
You see, that's exactly why. Every stock might have the same output, but the input is very different. Consumer tech might be an umbrella where somebody is broking house. It's accumulated lakhs of active users. That's a very different recurring purchase and sale transaction. Now, if you look at somebody else selling a commodity on technology platform with 2,700 different stores, that's also called consumer tech. I think they're completely different business models. Might throw up the same output that they rallied, both of them rallied after getting listed. But that's why bottom-up stock picking has so much more to see in the input side than just the output and the headline or the name tag, as we can call it.
All right, that's the thought then. But I want to get in a few more thoughts then. Bets of a rate cut in the US may be fading, although yesterday we had Waller once again saying that, given the fact that labor market is weakening, the case for a rate cut is still there for December, but a lot of others have said that we shouldn't be going in for a rate cut. So yes, their chances are receding. But back home we've had a record low inflation data, and there's a chorus growing that we could see 25 or another 50 basis point rate cut by RBI as well. So my question is, for retail investors, does it make more sense to increase exposure to debt funds, hybrid funds, or stay overweight equities? Because even in the last month's mutual fund data, we saw that equity fund inflows have slowed, but hybrid fund inflows have gone up. So what is the thought process there?
Yes, like you said, it's very apparent that the rate cut probabilities in India are going up substantively, point one. Point two, I think the core inflation hasn't come down. CPI has to multi-year lows. So I think the probability has gone up, not as much as what the CPI reflects. That's point two. Point three, already you see the yield curve, which was flat. This was a prediction repeated multiple times on different platforms, that we had a flat yield curve, which was impractical for an India. Now the short end of the yield curve, the 3-month paper has come below repo, which is 5.38. The 10-year paper is at 6.51. There's at least a 120 bips difference in the spread. The yield curve has again become upward sloping. Is there too much money to be made in debt? The answer is a big no. Most debt funds who would give you a capital appreciation will take 90% of it as a fee itself. So I personally think that's not even a play. Even if the 10-year GSEC comes to 5% on a 6-year modified duration, you make a 9% capital appreciation. Over a 5-year period, the fee expense will be 1.5% extra if you're actively managing the yields. So I personally think that's just a great selling story of a product, but not a great practical portfolio creation tool. Because net, you're going to still pay tax at marginal tax rate, because Section 50AA, which was introduced in Income Tax Act, treats debt as a very big detrimental tax instrument. So coming back to the point, I would say if the interest rates come down, you have a larger leveraged play on equity. So making money in equity is going to be so much higher. That's one of the reasons why I said the odds of Nifty delivering 11% plus compounded return over 3 years is high, largely also attributed to the interest rate softening over long periods of time, which we expect.
Also, flows into gold and silver ETFs, Feroze, have seen consistent inflows, right? Of course, people would argue that this is a classic FOMO trade. But would this trend continue, or post December, January, do you expect this trend to kind of fade out?
Gold in dollar terms touched almost about 4,300. Now it's at 4,022 today morning in dollar terms. I personally think that if anybody's got debt in their portfolio, having 50% of their debt in gold in a staggered fashion makes sense, because rightly or wrongly, because there's no fundamental report ever read on gold. So with demand and supply estimates, in my opinion, 3,000 to 3,500 is where the average gold price could be. If you staggered half your debt money into gold and had the potential to hold gold without looking at prices, because Indians have this love for FDs and gold. So if we give them gold, if I give them equity, they will look at prices more frequently. If I give them gold ETF, they're more calmer. You can use that to weather the volatility and make almost twice the return post-tax on debt, because gold also throws up great tax efficiency, unlike debt. So net, what I'm saying is silver is not even an asset. Any asset which can change price 5% is too volatile. If it can give 10 years of negative return, which it did from 2021 to 2011 to 22, it's not even formulated itself as asset unless you are in solar panels manufacturing. Don't buy silver unless you're going to serve your guests with those vessels and utensils. So silver has not made the cut mathematically. Gold is a great asset for you to replace debt, not equity, but in a staggered fashion over the next 1 year.
All right, that's the thought then. With that, Feroze, would like to thank you for taking out time and sharing your thoughts. Always a pleasure, and I get to know, your new perspective. You share a new perspective with our viewers every time you join us, and I really appreciate you doing that. Look forward to our next one as well. Thanks a lot for joining in. Well, on that note, take a look at the market. We've now slipped further. It's a 100-point cut. Holding on to the 25,900 mark now as we speak, on the brink of breaking below that as well. But, of course, turning out to be a weakish one as of now. Don't forget, it's also the weekly expiry. So, it could be a fairly volatile ride for today. The Sensex is down somewhere around 298 points or so. The mid-cap index moving in tandem with the benchmarks, cooling off 0.5% or so. And the Nifty Bank index although has pared some of the opening losses, but nevertheless trading with a negative bias. Breadth now has worsened quite a bit, so to say. It's 2:5. That's the NSE advanced decline ratio, so not looking very pretty. Let's see whether we can stage some kind of a comeback in the second half of the session. But I just want to take you through what some of the sectors are doing before calling it a day on opening bell. All of the sectors are trading in the red. Bottom of the heap is the metal index, down 1.5. Blame it on the dollar strengthening ahead of key economic data from the US. So that is one reason why metals are falling. Realty, it's down over 1%. IT also almost 1%. Pharma under pressure. FMCG, autos, all of these sectors are trading in the red. So all in all, turning out to be a weak one. Let's see if we can stage some kind of a comeback. But with that, we are completely timed out. Just want to tell you 1 minute to go for the PhysicsWallah listing. Let's see whether it can deliver a listing pop or not. The IPO was subscribed 2 times. The shares on offer. That's the newest one to make its listing on the Lal Street today. All eyes on how it lists, really. Thanks a lot for staying with us over the last hour. But of course, we'll be back with closing bell at 3 p.m. and take stock of what the market does through the day, and of course the crucial last hour on expiry day. We will be joined by experts as well to help you navigate the last half an hour of trading. So stay tuned, and of course tune in for closing bell at 3 p.m. With that, from me and the entire team, thanks a lot for tuning in. Have a great day, and come back and join us later. Thank you.